Mr. Sasank Priya, our Senior Vice President Gopal ji, Vice President Anil ji, my colleague Mr. Gupta, distinguished members, ladies and gentlemen, good morning. Today, we are doing full day conference only on draft GST law, which has come on public domain on 14th of June 2016. Objective of this conference is we should discuss each of the component in detail so that we can identify, evaluate and analyze impact of GST overall on all subsuming indirect taxes. Before I give my theme presentation on draft GST law, it is important for all of us to understand why we need GST and why we all are pitching for GST. Whether GST really required for the country, and after that I will touch upon draft GST law and how it is transforming existing indirect taxes from manufacturing, sale of goods, rendering of service to supply of goods and services. To start with, today, if we look at, we are having multiplicity of taxes, be at central level, be at state level. Under central, we got custom duty, we got service tax, we got excise duty. Under custom BCD, basic custom duty, CVD, custom SAS and SAT. So CVD and SAT is going to be subsumed, excise duty going to be subsumed, service tax going to be subsumed, and surcharge and cess. Coming to the state levy, we got value added tax, CST, entertainment tax, unless levied by local bodies, luxury tax, entry tax, and octroi. These all are going to be subsumed in one name, GST. So advantage one, all multiplicity will go away. Second, we are struggling with double taxation today. If we talk about excise and service tax, we got item drawing and design, we got software, we got supply contract along with installation. Double taxation items is applicable. If you talk about VAT and service tax, lot many items, starting from construction, IPR, IT software, right to use of movable goods, works contract, and AC restaurant. So this double taxation will go away in GST, second advantage. Third, cascading of taxes, which increase our pricing of goods and services. Tax on tax, excise charged by a manufacturer to a VAT dealer, credit not available in the hands of VAT dealer. Similarly, VAT charged by a VAT dealer, credit is not available to a service provider or vice versa. CST credit not available, entry tax credit not available. So majorly multiplicity, double taxation and cascading is going away with GST. And how it is going away, we'll discuss at length in today's conference. Simultaneously, what happened? GST comes in. It will give incremental GDP growth by 1% to 2%. It will increase tax to GDP ratio, bring transparency, bring uniformity in terms of registration, return filing, refund, payment. Taxable even will get settled down to supply only. We'll done away with the manufacturing, sell, and rendering of service. So these many advantages, and really this GST will facilitate make in India by making one India. That is what the crux of GST today. If we are having office in 29 states and we are VAT registered, believe me, we have to follow 29 state VAT provision, and which is varying from one state to another state, which will go away in GST, and that will make and facilitate Make in India by making One India with ease of business and simplification of business. Having said that journey of GST, where we are, we all know on 19 December 2014 landmark date, 122 Constitution Amendment Bill was placed before Lok Sabha, which got passed on 6th May 2015, and then on 12th May 2015, it was sent to Select Panel. Select Panel has submitted their report on 22nd July 2015. Since then, we are waiting that this 122 Constitution Amendment Bill get passed in Rajya Sabha. Now it looks like our arithmetics, numbers, the magical numbers, looks like possible, positive. Consensus is emerging, and ruling party is hopeful of getting past 122 Constitution Amendment Bill in this monsoon session. Keeping in mind, Empowered Committee, led by Chairman Mr. Amit Mitra, recently met, and in principle approval is being given to the draft GST law, which has come on public domain on 14th of June 2016. This draft GST law is providing draft CGST Act, SGST Act, and IGST Act. If you talk about CGST and SGST, it contains 162 sections, 25 chapters, 4 schedules, and 1 GST evaluation rules. If you go to IGST Act, it contains 33 sections and 11 chapters. Virtually, we got 195 sections to read. And that is what we have divided today's program to discuss, deliberate, and see the impact, and summarize the point from our side, which can be given and submitted from PSD Chamber of Commerce as a memorandum to the government, what we are looking into, what we want virtually for GST. So draft GST law, important for all of us. So GST is applicable on what? This is a broader item. GST is going to be applicable on supply of goods or services, except alcoholic liquor for human consumption. So the term supply is very, very important. Goods definition is important, service definition is important. I would like to highlight for all of you why we should look at the term supply, because that is a taxable event for the chargeability of GST, because the concept of manufacturing, rendering of service, sale is going away. So what is term supply? And believe me, you have to apply your mind, because this is broader term supply, but what it talks about, definition of it. Section 3 of CGST or SGST Act, as applicable to IGST Act also, supply includes all forms of supply, such as sell, transfer, barter, exchange, licensing, leasing, renting, disposal of goods and services. So just look at the term, made or agreed to be made for a consideration by a person in the course or furtherance of business. So there is only by a person, not to a person. Self-supply would be chargeable to GST. Includes all forms of supply, sell, transfer, barter, which is not chargeable to VAT today, but GST applicable. Exchange, licensing, leasing, every and each term used in the definition of supply is an important one. And further continued, import of services, whether or not for consideration, whether or not in the course or furtherance of business. And there are certain matters which are to be treated as supply even without consideration, and GST applicable. And what could be the example? Permanent transfer of business asset or asset retained after deregistration. Schedule 1, which is being provided in draft law. Matter to be treated as supply of goods or supply of services. We all are struggling with double taxation. construction and works contract, VAT applicable, service tax applicable. But now Schedule 2 provides the clarity. And this Schedule 2 says all declared services, which is there in the definition of service today, will be supply of service. So construction contract, works contract would be supply of services. So double taxation to that extent will go away. Schedule 2. Subsequently, agent supplying goods on behalf of principal for agreed commission or brokerage is a supply. Or central government or state government can issue a notification on recommendation of GST Council whether a particular transaction is a supply of goods, not service. Supply of service, not goods. Neither a supply of goods nor a supply of services. So they have those power. And last, aggregator providing services under trade name or brand name is a deemed supply. So supply term is being defined in this manner. So it's important for all of us to understand what all falling within the definition of supply, and that too for a consideration. And what is goods and services, and why I'm highlighting for all of us together, because these terms are going to play an important role to evaluate, analyze impact of GST overall. Goods is being defined. Goods means every kind of movable property other than actionable claim and money, but include securities, growing crops, grass, things attached to or forming part of land, agreed to be severed before supply or under contract of supply. And movable property does not include intangible property. So software industry is struggling with double taxation. It is not goods. Settle down with the definition. It is service. And what is service, by the way? Service means anything other than goods. And service includes intangible property and actionable claim. But actionable claim today in the service definition excluded from the service definition, except money. So we have to analyze those provisions. And what would be the levy, chargeable section under draft GST law? It said there shall be levied a tax in the name of CGST or SGST for intrastate supply of goods and services. IGST for interstate supply of goods and services at a rate specified. And this rate is not specified as yet, and would be collected in such manner as may be prescribed. So we would be looking into what would be the rate for the chargeability on goods and chargeability on services. Chief Economic Advisor-led committee has submitted their report, and they say there will be 4 slab, which is subject to approval by GST Council. 2 to 6%, 12%, standard rate would be 18%, and 40% demerit goods. So we can start evaluating if I'm the manufacturer of goods or provider providing services, how it is going to impact our overall business. If we keep 18% as a standard rate, collected in such manner as may be prescribed, so point of taxation. When we have to pay GST, time of supply as prescribed under draft GST law, time of supply is being given for forward charge, reverse charge, continuous supply of services, and specific transaction and residue entry. Just to highlight what is forward charge, when supplier has to pay the tax GST, and it would be earliest of the following. For time of supply of goods, what are the earliest? Date of removal of goods, if movement requires. If movement does not require, date of making the goods available to recipient, date of issuance of invoice, date of receipt of payment, and last date of receipt of goods in the books of recipient. So what happened earliest of the 4? Date of receipt of money, advance money for supply of goods at a future date is a POT. Today we don't pay excise duty and VAT on advance money. But tomorrow, if we are receiving money, advance money for supply of goods, GST would be applicable. Start working cash flow and your fund flow. Services, we know we pay service tax on advance money, but for goods is a new concept, reverse charge. Reverse charge we have seen only for services, not for goods. But now they are saying there may be certain item where reverse charge would be applicable even for goods. And what they say, earliest of the following: date of receipt of goods, date of receipt of invoice, date of making payment, or date of debit in the books of recipient, earliest of the following. Even this reverse charge going to be applicable for goods. We know reverse charge for services. So they will specify what all goods and services would be coming under reverse charge. Thereafter, we come to registration and chargeability of GST. Registration is required if aggregate turnover crossing 9 lakh rupees. For Northeast state, including Sikkim, 4 lakh rupees. And chargeability start if it crosses 10 lakh rupees. And for Northeast state and Sikkim, 5 lakh rupees. Just to highlight what is the meaning of aggregate turnover then. Aggregate turnover as defined in the draft GST law, it includes taxable supply, non-taxable supply, exempted supply, export of goods and services. Just try to visualize a situation. I'm a dealer. I've got 11 lakh rupees my aggregate turnover, which includes 9.5 lakh rupees only from non-taxable supply. But it's a part of aggregate turnover now. On non-taxable supply, GST not applicable, but now it's a part of aggregate turnover. So it's a matter of representation for small sector, medium enterprises. And then compulsory registration required for interstate supply, reverse charge, ISD, TDS deductor, e-commerce operator, aggregator, compulsory registration. And when registration not required, when employee providing services to the employer, or you are exclusively engaged in supplying of non-taxable goods and services, or you import, receive services for a specified amount for personal use. And there is Schedule 3, which has been prescribed for liability to be registered under GST. And Schedule 4, which talks about there are certain transaction of goods and services given by government, central government or state government or local authority. They need not require to be registered. So these items are very, very important for all of us. Moving further, after deciding all this thing, in GST, both central and state going to levy GST. So state was not charging any tax on services. State was not empowered to levy excise duty. But today, they are going to levy GST on goods and services where they were living. So place of supply is very, very important. GST being a destination-based consumption tax, so where the goods are being consumed, that state will get the GST component. So what would be the place? Important for all of us. So place of supply for goods and services are important. It has been given under Section 5 and 6 of IGST Act. So what is the provision provided? And why place of supply is important? To determine whether transaction is intrastate, interstate, import, or export. If you're importing goods and services, then IGST would be applicable. For import of goods, BCD and IGST. For import of services, IGST would be applicable. But which state will get SGST component of IGST? The state where it is being consumed. So place of supply rules is very, very important for all of us. So place of supply for goods, how they are saying? They are saying if goods involves movement of goods, Let's say from Delhi to Haryana, then the destination of goods would be the place of supply. Haryana will get the GST. If it does not involve movement, then the location where the goods are being supplied. In case of installation and assembly, the place of installation and assembly, where goods transfer of title in goods before at the time of movement, then principal place of business. These are being prescribed for place of supply rules for goods. What is place of supply for services? Services being intangible, lot of ramification will come. Today we are centralized, registered in Delhi for providing services across India, and we are filing 2 half-yearly return. But tomorrow, if we are having 29 office and centralized registered, we have to identify which is the place of supply where we need to take registration and discharge the GST liability. Normally for B2B transaction, location of service receiver is important. Unless otherwise provided, then location of service provider. B2C transaction, location of supplier. But you must be recalling place of provision of services rule, 2012, which was pertaining to import and export of services, but now place of supply rules important for both goods and services. And specific rule is being provided for performance-based, immovable property, event, and both supplier and recipient located in taxable territory, and specified services in terms of Rule 9, like banking and financial services, online database access retrieval services, intermediary services, transportation of goods, transportation of passengers, value-added services on conveyance and aircraft. So specific rule is being provided. We have to look at those rules to determine the place for registration and discharging the GST liability. Now moving to valuation. What would be the valuation? Today under excise we got MRP based, all going away. It's a transaction value. Paid or payable for supply of goods, where supplier and recipient are not related, and price is the sole consideration. And transaction value includes, now here's the highlight for all of you, it includes all reimbursable expenses by recipient to a supplier, FOC material and services provided by recipient to a supplier, royalty or technical fees as a condition of supply, or subsidy received linked to supply of goods and services as a part of transaction value. So if you are only a VAT dealer, you got some material from your recipient, you have never included in transaction value for discharging VAT liability. But now you have to change the perception. And this particular conference is very much important to highlight those parameters technically in our technical deliberation. We only expect from all of you that you should really start gearing up. Government is positive about. They have come out with a draft law before this monsoon session start, which is expected on 18 July. But we should really summarize our memorandum and submit to the government. This is the high time we should stand up what we are looking for, unless otherwise too late from our side. Then I move to valuation other component. What are the other component? They say if transaction value is not applicable, or where supplier and recipient are related, money consideration is not there wholly or partly, or your valuation is doubtful, or for a specific situation like pure agent, money changer, life insurance, specific rule is being provided. They are saying comparison value method. What is comparison value method? Goods of like kind and quality, like similar and identical goods under custom valuation. So the big question, I'm providing service and my colleague is also providing service, whether it can be similar. You may be taking services from A category service provider and you're taking services from C category service provider, whether both can be similar. Comparison. Start thinking. If it is not comparison, computed value method or residue method. After discussing valuation, I'm moving to input credit. We have seen in existing provision, be standard credit rules for excise and service tax. We always struggling, why can't we get the credit of taxes paid on input? Why there's a rider in the definition of input and input services? Whether that is going away. First of all, the concept of business is being inserted. So this activity is relating to business which was deleted from 1st April 2011, now got inserted. Laudable one. But what are the things need to be corrected? From my side, I'm just giving food for thought. The first one, input service definition excludes construction, works contract, motor vehicle, employee-related input services, credit not available. Still, we are following the same provision. Do we want to represent? Of course, we need to really stand up and represent the issue. If supplier is not paying the GST liability, recipient will not get the credit. Imagine a situation, you are a big, large player, you got 10,000 vendors supplying goods to you, and your few of the supplier does not pay GST, recipient is denied of GST credit. How you'd be managing and controlling all those situations? 1 year time limit again, maintain in draft GST law for input and input services. So really we have to start thinking, and these are the points I thought I should really apprise this August audience to start thinking on those lines. Now coming to last component, what we are looking today and how we can move forward. See, under draft GST law, after discussing GST input credit, there are imprisonment provision also. For tax evasion cases, we are of the view that imprisonment provision should not be there. Criminal kind of stuff. But it is still there. What happened for assessment, adjudication, audit, investigation, and inquiry? Lot many provision. Today, so-called notice is being issued, but not adjudicated, and it goes on, goes on, goes on. I want provisions should be inserted in draft law. Accountability, that assessment should be complete within 6 months in case of normal period, and in case of abnormal period, extended period invoked, maybe 12 months. Some accountability. What happened in a situation, my liability fixed for 5 years, but my credit is being denied beyond 1 year. So those are still contrary in today's provision. Do we want to carry the same legacy? We are discussing constructively. There's nothing like we are criticizing here. I'm only saying that please start and constructively you start giving your input and suggestion. And government is really positive enough. We got the feedback from CBEC, and Sasankji is there today, and he has said, Bimal, please summarize your whatever suggestion and input. We are really positive, hopeful about it, and that's what we'll listen to him as well. Coming to the last component, we got draft GST business processes for registration, refund, payment, and return filing. There are 8 return prescribed. For a service provider, he only files 2 half-yearly returns. As minimum, if a service provider has to follow the draft GST business process for return, it looks like 61 return he has to file per registration. So what happened if he has office in 29 states, and now he has to go and take registration in each of the states where services are being given, destined and consumed, 29 registration and 61 return per registration. We have represented this issue, but it is required to be represented more conclusively. Thank you. Thank you very much.